What makes these so powerful is that they used to be bearish, but the bulls have come back so strong they completely reverse it. When that reversal happens, we pile into that bar. Now, my traders are taught you buy into this bar toward the end of that bar's formation. So if it is a daily bar, you must buy in the last 15 minutes of the trading day. Because I don't want the bar that was a bull elephant at 12 Eastern turns into a bear elephant or a bottoming tail bar, because in reality, this was a bull elephant bar that went bad. So we need to wait till the end of the bar's formation, and right before that bar finishes trading, we buy into the bar. So if you're looking at the Australian dollar and a bull elephant on the daily chart forms, this bull elephant bar is the biggest bar on the chart for a long while. It's tall. It's like a skyscraper standing above all the other bars. It can only be formed if major institutional buyers have just jumped into the pond and the water level rises so high from the force. You're following the footprints of institutions. Right? Now, how we play these for consistent profits. We buy into them toward the end of the bar's formation. If you buy everything, if you take your whole account and you put it into a single bar, which is appropriate sometimes, then your stop is going to go under that bar. If you have nibbled, there is no stop. We place stops under the last bar we buy. Please make note of that. If this is the last purchase you will make, your stop goes under that bar. If you plan on making multiple purchases and this is just a nibble, you do not place a stop until your last commitment. And that's when your protective stop goes under the bar, the last bar you dove into. Same thing on the short side. Now, I'm going to focus on, now guys, I understand that in internet land we might be disconnected here, but I do have a little bit of space beyond our allotted time, and I'd like to spend that with you to get this whole strategy under your belt. Is that okay? All right? This is very important. Remember, now, how many bars, what are the two categories of buy bars? Two parts of an animal, right? There's what? Elephants and then tails, right? We're going to focus on the tails today. There are two types of tails. There's a regular tail bar, and then there's the kamikaze tail bar. I want you to know the kamikaze tail bar. I have 8 kamikaze events that I teach my traders. I'm going to give you one of them today. These events are give it everything events. They are risk it all events. These events are so powerful that I want my traders emptying out their account into these single bars, leaving nothing on the sidelines. There are times when it's appropriate to risk everything. We do not risk everything on regular tail bars. We risk them only on what I consider kamikaze tail bars. Let's look at the definitions. Regular tail bars occur at or near a 20-period moving average of your item. So in every item you look at, whether it's one of the currency ETFs, whether it's silver ETF, whether it's gold ETF, whether it's the stock of GE, remember, we play the companies that benefit from an eroding dollar. And we also play gold, we also play silver, we also play the currencies. And these bars help us know when we should go into which one and where. All right? Now, the regular tail bar occurs at or near the 20. The kamikaze tail bars, the ones that we put everything into, form deep below the 20-period moving average, and they have a lot of space between the high and the 20-period moving average. So let me show you this. This is a huge bottoming tail bar. We're looking at a stock. It's CMCSA. The symbol doesn't really matter very much for demonstration purposes. What you see is a nice sizable bottoming tail bar. But this bottoming tail bar is at or near this 20-period moving average. There is no space between the high of the bar and the 20. It's equal. So this would qualify as a regular bottoming tail bar, which means that you buy a regular amount of it. Regular doesn't mean pass. Please, by all means, buy every bottoming tail, because I will fire a trader if a bottoming tail forms and they don't buy it. If a bull elephant happens, they will get, and they don't buy it, they're going to get a swift kick from me. All right? I want every elephant bar bought. I want every bottoming tail bought, whether it's regular or kamikaze. It's the kamikaze ones that I really want bought aggressively. Now, this doesn't quite qualify as a kamikaze, but we're getting closer. Look, a bottoming tail bar. Now, whether it's red or green at the top or no color means absolutely nothing. It's the tail part that means something. Now, remember what a tail bar means. It means that at one point, this was a solid red bar, and then most of the red was wiped away by the bulls. The only way to get a lot of red to disappear, it takes billions of dollars. Who just stepped into the pond? A huge herd of elephants. You can't make a lot of red disappear. I can't. We could pool our money together and buy at the same time, and the red wouldn't budge. It takes billions of dollars to wipe out the size of that redness. Someone or a group of someone just stepped into the pond in a big way, and I want my traders jumping on board their coattails. So we buy into this bar toward the end of the formation. If I've bought everything and all, where is my stop? Under that bar's low. So get this, ladies and gentlemen, you will risk one bar on every trade that you buy everything in. When I say risk it all, I'm not saying risk it all randomly and in a harmful way and let the thing go to zero. No, we risk it all in that one bar. And if the stock drops below the low of that one bar, we're out. So did we really risk everything? No. We just risked the distance between my entry price and right under the low of the bar. This occurrence is so powerful that it will be a rare occurrence of being stopped out. Rare occurrence of being stopped out. So let's assume this was the Brazilian real. And all of a sudden, it dips below the 20-pip movers and gives you a powerful bottoming tail bar. That says buy the Brazilian real now. But wait a minute. Let's say your Canadian dollar holding rallied above the 20-period moving average and just put in a topping tail. That would say sell the Canadian dollar, topping tail way up there, right? And buy the Brazilian real, bottoming tail down here. Does this make sense? You can take a collection of items and know where to roll the money with these three bars. It's powerful, ladies and gentlemen. It's powerful. This is the kamikaze. Look, bottoming tail bar. Look at it carefully. Way below the 20-period moving average. And there's a lot of space between the high of the bar and the 20. Look at the space. This is a risk-it-all kamikaze bottoming tail bar. I want that bottoming tail bar deep below the 20. I want there to be a lot of void, a lot of space between the 20 and the top of the head of the bottoming tail bar. And that's a bar I will allow my traders to take their entire account and buy it all with a stop under the low. And then I tell them, get out of the way, because now you're the problem. Once you put money on the line, get out of the way. All right, if I had my choice, the computer would go off and the keyboard would stop working. All right, you got to let this thing do what it wants to do. Now, let's say you didn't buy all, and you went by the three bars. You just buy here, and then you buy every elephant and bottoming tail bar that occurs after that. Maybe this one. Here's another bottoming tail bar. That's a regular one that happens at or near the 20. All right? And so forth and so on. Now, my traders are taught that once an item gets way above the 20-period moving average, it's potential profit-taking area. So we've bought everything at this bottoming tail and maybe taken some off the table here, put it back on with this bottoming tail, taken some off the table. So it's almost like, okay, we're buying under the 20. When it gets above the 20, we take some off. And then we go right back into it under the 20. When it gets above the 20, we take some off. So we measure spaces above and below. And so this is the below. And this is the above. Look at the space from this high to the 20. Look at the space from this high to the 20. When that space gets too long, it's extended. We take some off. When the space beneath gets too deep, we put it back on. Does this make sense? It's powerful. The $64,000 question as a trader is, when do I act? I even make it simpler. I give you what to trade. Most traders don't even know what to trade. Oliver, okay, which currencies? Which precious metals? Oliver, which companies? I give them that. And then I teach them which bars say go and which bars say act, which bars say exit. Bottoming tail bar way below the 20. A lot of space between the high end of the bar and the 20. Kamikaze bar, you put it all in with a stop under the low, you get out of the way. If you didn't risk it all, then you buy and add every time there's a bull elephant. You add to it. Every time there's a bottoming tail bar, you add. You keep buying and buying and buying and buying and buying until you get way above the 20-period moving average. You hit up every single one of those bars, and there's only two to look for, elephants and tails. You do not buy an elephant way up there. If a bull elephant forms way at the top, that's a buy bar or sell bar. Sell it. You always sell way above the 20. I don't care what kind of bar is up there. All right? Bottoming tail bar below the 20. There is some space between the high and the 20, not a lot. But I'd still buy that aggressively. And if I didn't buy all, I'd buy this aggressively. Now some would say, Oliver, but that's not quite a bull elephant. In reality it is. It's relative. Relative to the bars to the left of it. So if you look back, this bar is still fatter and more solid than most of the green bars. You got to go back quite a while to find one that matches. So I'd say that would qualify as at least a baby elephant. It's relative to the bars next to it. All right. Bottoming tail bar way below the 20. All right. Space between the high, the 20. We buy into this bar. When do we buy into that bar? Toward what? The end of its formation. If that's a 60-minute bar and you're looking at a 60-minute chart, then you buy in the last few minutes of that hour. If that's a 5-minute bar and you're a day trader and you trade the 5-minute chart, you buy in the last few seconds of the 5-minute period. If it's a daily bar, the last 15 minutes of the trading day. You must make sure this bar is going to close as the bar that you really want. And once you buy it and if you risk all, where's your stop? Under the bar's low. Think about this, ladies and gentlemen. Look at these charts. Look. Bottoming tail bar. Bottoming tail bar. Look at how many bars follow. Bottoming tail bar. Bottoming tail bar. Now I'm going to ask you, what if you had a strategy where every time you lost only one bar?